Hello guys, and glad to have you on board again today. I had a very interesting question earlier and I really thought it was worth it to go public with this because doing my research to try to give the best possible answer to that person, well, I digged out some information that's kind of shook out my vision in the process. So here is the video sharing that knowledge to you guys. Basically the question was all around the topic of Bitcoin's halving in 2024 and the fact that we will probably not sustain a bull market before that due to the fact that historical halving cycle and the fact that the global crypto market has always surrounded the one of Bitcoin. So basically Bitcoin the leader, nothing can happen in crypto if Bitcoin doesn't follow suit. And well, I would agree with that, but things change and there are definitely signs that these things have already changed. And therefore we wanted to talk about that. And in the process of doing this, I kind of had an idea that I really digged down to its knees in order to figure out what true future changes could the halving do to the global crypto ecosystem. And this is what I'm going to be sharing with you guys today. So, of course, you know my drill. I don't do the things that you see already 10 times in every YouTube channel and so on. So I'm not going to do the TLDR basic stuff of Bitcoin's halving, what they are, how they happen whatsoever. Okay, really dig into the stuff that you won't see elsewhere. So let's dive into this. So next Bitcoin halving 2024, most of the knowledge that I will talk about today, stock to flow model and stuff like that. So if you don't know what I'm talking about, get documented yourself, do your own research. Okay, so the thing is that it all started with this. Bitcoin has been the king in the market because anytime its halving happened, we were just basically touching on one of the two ends of the price equation, which is supply on the end and demand on the other. Supply is easier to figure out because it can mathematically be proven. And most importantly, mathematically be calculated ahead. And that's the true advantage of Bitcoin because we know exactly how the inflation will behave in the future. Although these things can change due to governance, but no one wants to change that on Bitcoin. This is where value is stored. So Bitcoin's inflation is both mathematically proven and projectable, which is very, very interesting type of things. Though this is where the Bitcoin value is, and the rest of the crypto market has built itself on top of it. Innovation just didn't stop with Bitcoin. There's been money programmability with Ethereum and lots of other things. Though this is the assumption. Where are we now? Where did we get there? How did we get there? And basically halving through halving cycle, the ecosystem has been maturing. So let's dive into this. Next halving is 2024. Previous one was 2020. And back then, earliest one was 2016. So we're in the current cycle in between 2020 and 2024. The previous one, therefore, has to be studied between 2016 and 2020. So we had a totally different market behavior. Back then, of course, Bitcoin was the king, and we've seen the emergence of, well, new stuff. Ethereum's programmability of the money and other competitors as well trying to go into that market share. So the thing is that back then we had the emergence of new potential technology, meaning that Bitcoin itself was a breakthrough technology in the way we reach out consensus through a blockchain with a unit of account, Bitcoin, that we can program inflation over time. Basically, it's just 180 degree out of fiat currency. We just do exactly the opposite. Instead of giving blurry system of controllable inflation on demand, we have something that no one will be able to change and we all have to agree on. Very, very, very breakthrough stuff. Then, of course, programmability of the money is the theme of the cycle 2016 to 2020. Of course, back then, this is not a trend. I mean, we had some absolutely unsustainable market growth and stuff like that. So it was no more than just, call it plain simple, a bubble, okay? It was the bubble as well for Bitcoin because we've reached out some more maturity stages in which we started to go into more broader sense of the people getting to know how these things works and so on. But back then it was the bubble all along. This is where I started to know about these technologies, and back then you have videos to prove it. First things that I saw that I said was, boys, you're really pushing these things to the limit. When you're going to find it, it's not going to be pretty. Basically, if these things are truly breakthrough technologies like you pretend they are, well, first, I'm going to crush them down. Oh, not me. I mean, the market will crush them down, and then we'll see if that thesis survives over time. And if it does, if it is true breakthrough technology, I'd rather like to buy the crash rather than buying the FOMO. And that's exactly what I've done. So the fact that the market recovered and go one step further means, yes, this is true breakthrough technology. And to be honest, I definitely agreed with that even back in 2018. Just thought it wasn't the appropriate amount of, the appropriate cycle to do this. Basically, what was sold back then, the future, whatever, was just too much short-term gambled for this to be truly on the right and appropriate cycle. So this is a multi-year long cycle to get there, and only those who will sufficiently good enough navigate those cycles will be able to be there for the big value transfer that will take multiple cycles. So then jumping into the next cycle, okay, so basically this is 2020 till 2024, and we're still into that cycle. This one isn't nearly a bubble. The price structure in here is no such a thing. We have a totally different way of pricing things. So some people might say we still go vertical, absolute bullshit, stupid stuff. Well, it isn't, because multiple things have changed into this cycle. The first one, which in my personal opinion is the top argument to destroy Bitcoin Max's vision that there will be no bull market until Bitcoin halves again. Stock to flow. Basically, the stock to flow model has been entirely diverging in the 2021 cycle. People first so, oh, we're lagging to the cycle, so Bitcoin's going to explode to 150K, whatever, and so on. And then day after day, we kept on diverging from the model. So it is always one thing. Models can be used until they diverge, and you always have to follow prices. So if we've diverged from Bitcoin halving cycle stock to flow model, it's probably because it's not that impactful today. Things change all the time, and this is one of the things that started to change. So this domino has fallen, and yet people kept handing over it like this is just a small short-term divergence, we're going to get back to it, it's just because there is temporary competition, all of these Ethereum bullshit stuff, they're all going to die and people will go back to the core thesis of Bitcoin. I disagree with that, might be right or wrong, but I will say is that so far all of those who've been maintaining that thesis have just been proven wrong. So here it is. The reason why I think it's wrong, on added to this, the stock to flow failing severely, not just deviating a bit, we're so far off the supposedly stock to flow model to say that in our price equation of both supply and demand ends, then basically, yeah, halving is reducing the supply on a mathematically programmable way. We know exactly. Okay, but the supply end of the equation isn't the only one. Demand has taken over, and as adoption matures to a larger share of the population, then of course demand goes to a much more appropriate importance in this equation. So it's really shifted out of supply into demand, and that is, in my personal opinion, what pushed us away from the stock to flow model. Stock to flow is basically out of supply end calculation, and we can see that we diverge because the demand is not meeting this at the current stage. The reason is Bitcoin isn't alone anymore. It was back then in the 2016 to 2020. It was no more than an experience of potential competition doing other stuff. This competition has survived as well. But like I said, Ethereum was a gamble in 2018. It's no longer a gamble today. It's working. It's very much working, and we can definitely program money and do a shitload of things with that, DeFi and so on. So all of these things have done just one thing. If you take the global crypto market as a sector, well, this is why Bitcoin's halving are no longer matter that much. Because basically the last halving was done with a approximately 70% dominance of Bitcoin in the market. The next halving, well, of course, I can only guess at that point, but I think we're going to be nearing 40% dominance. I think the dominance might go lower. These are technical suggestions, of course. I rather like to follow my models until they're proven wrong as well. Not forecasting the future, just saying that technically speaking, probabilities are for a deterioration of the dominance further down the road after, of course, I think some kind of recovery. If this happens, let's call it net-net. I don't know, of course. I can't precisely say in the day of the halving we'll get there. But I think net-net appropriate 40% seems a reasonable outcome. Though last halving was 70% dominance, next one's going to be 40. So something had to move those areas from 70 to 40. basically only one candidate succeeded in that manner. This is basically Ethereum, which has been going from nearly 7% dominance in the light cycle to today's 20% and rising. So this is the thing. Ethereum is the rising competitor against Bitcoin. That doesn't mean it will replace or whatever. It just means we have a more complicated ecosystem today. So going for the simple math of Bitcoin halving to create crypto markets, no way. Yes, there are some side effects of Bitcoin halving, and we're going to dig into that later. But number one, yeah, stock to flow failing and Bitcoin dominance falling, and further falls are expected for now due to the rising star that is Ethereum. Ethereum isn't reaching for the skies. I don't believe the flippening narratives and stuff like that, but for now Ethereum is trying to go higher, and as long as we don't diverge from that model as well, I'd like to keep it as the most likely outcome. Ethereum keep on grinding market shares over Bitcoin, and later in the stage, eventually Bitcoin recovering to the fear status of, let's just go back to the store of value, which will happen inevitably, I think, at some later stages in the market. Okay, so we have the basic of our equation. Stock to flow failure is supported by the Bitcoin dominance falling, and the fact that, of course, the supply reduction after each and every halving gets divided by 2, so the net row reduction of inflation gets narrower and narrower. Today, the actual stock to flow model is going to give us another reduction of halving to 1.70%, which is basically the next reduction is not going to be as significant as the previous ones were. So basically the stock to flow model will keep on diverging for that reason, because this net supply reduction at each halving is reduced. Just like the demand side of the equation grows and grows and grows through every cycle. So now it's a demand factor. The demand, as we studied it, is that it's no longer speculative. We're out of the bullish bubble to crash cycle. So what we get today is not a crash. What we get today is a huge and painful consolidation, mostly due to these unexpected, very aggressive monetary policy changes that were basically all the motives back then. That, well, we've got on one end a programmable supply, and on the other hand, we've got an infinitely inflated fiat system. So this narrative as well is falling down very dramatically, because of course, now we see that central banks are willing to put a brake on the infinite supply inflation and stuff like that. Of course, future will tell. But this is the stage we're in now. And these things says that the Bitcoin stock to flow model is just going to fall apart. It makes no sense. So how come that you can say that there was not going to be a bull market until Bitcoin's next halving? Because like we stated, today's equation is accounting for a competitor that has half the market shares of Bitcoin today, where just back then it was negligibly 7%. So yes, the competitor is rising, and the competitor has its own stock to flow model. And this is the thing. I said it back then. Ethereum's merge is not just a random shit event. It's like a triple halving. It's tremendous change in the supply emission of Ethereum. And basically, we're still trying to price that one in. Of course, its net impact on the global crypto market is subdued, because having 40% market shares versus 20 definitely means that the relative strength isn't that big. But the thing is that the relative implication of Ethereum is like the only one halving that will ever occur in Ethereum. There will not be merge 2.0 or whatever. It's the only time we've done a significant readjustment to the supply inflation. And in that perspective, yes, more than a triple halving in a single stage. And people call that an event. Well, no, it's a massive change for some market participant that has 20% of the overall market shares. So net, the actual question you should ask yourself is, do you really think there will be no bull market until the next halving? Because the major market competitor, which is still having 40% market shares, could replicate a somewhat hold model that were happening back then at the later stage in 2020, where back then it was weighting more than 70% of market shares, had absolutely no competition but just a bubble of whatever future we could have from programmable money. Well, now we know that future is more likely than it was back then. It's just not even sold through hype. It's actually there and growing. So this is the reality. The next Bitcoin cycle isn't the one that drives the market cycle itself. It's a dual mandate now. We have Bitcoin and Ethereum both leading the pack. But if we want to go one step further to try understanding that as these two guys will be leading the pack of the next bull market, then one has just passed its most significant change of supply side, it's the merge. And the next one won't do it until early 2024. So the reality is that we are kind of in a mixed bag system in between, because one, the challenger, oh, sorry about that. The challenger is and has already done its most significant change. There are no other changes ahead in terms of supply side emission, and the next one is pretty damn further down the line. So in between the two, there's gonna have to be a complex mesh, because of course, one without the other cannot necessarily lead the whole market behind it. I mean, Ethereum alone can't create a bull market, I think, but it doesn't necessarily have to wait until Bitcoin does. It's going to be a mixed bag in between, in which probably Ethereum will try to support the pack as much as it can, still being limited to the fact that Bitcoin might eventually have to wait until 2024. But like we stated, it is a big might, because actually Bitcoin's demand cycle doesn't give a fuck about halving. The demand cycle is no more than people buying on a limited supply. Today, we have 12% supply circulating on exchanges. This is so critical. So let me be real clear. I don't think Bitcoin has to wait until the next halving to actually be demanded and to see its price rising. It's, I think, a less probable outcome in which Ethereum successfully creates a bull market on its own, which Bitcoin will have to follow. I think it's a possibility. I don't see that as the likeliest outcome. Like I said, I see kind of a mixed bag in which we have kind of a range until Bitcoin halving shows up. Not a bear market, because we haven't seen a bullish bubble cycle. The bullish cycle was no more than a trend that has been harshly reversed. But it is no such a thing as a bubble this time around. And this is significant, because people expect this thing to crash until Bitcoin allows us to recover. I disagree entirely with that. Stock-to-flow failure says Bitcoin is not the only one anymore. Most importantly, Bitcoin's supply in the equation is getting diluted even more as the adoption and therefore the demand curve is taking a lot more importance in the supply-to-demand equations. And the demand, it can come at any time now. The supply on exchanges is critically low, so really focus on the demand now. The halving isn't the missing piece on that equation. Most importantly, there was a competitor which has kind of half the market shares that Bitcoin does have today, and this big boy just made a significant reduction of its emission lately. But most importantly, the question you need to answer in a broader market thing, because we're talking about whether or not we can have a bull market in the crypto in general, not just the Bitcoin and Ethereums, the rest of the pack. I think that people asking whether or not we can get a bull market before the halving isn't the right question to ask yourself. The right question is what this will do. Next Bitcoin halving is going to set the standard on rising the stock-to-flow model number, because basically, of course, the reduction is going to be less significant in terms of percentage based of reduced inflation. But one thing for sure, the next stock-to-flow number in here is going to be increased by the next halving. Most importantly, Ethereum's one, which is still dynamic, so it will take time to stabilize, but it's still now much higher. So right now, the higher stock-to-flow number is Ethereum. It's taken the lead over Bitcoin. Bitcoin is going to catch up with this? Of course it will. But once we get the next halving, I think there's only one thing that I'm pretty confident about, is that it will set the standard for the rest of the market. These will be kind of seen as the risk-free markets, those who have adoption, regulations, and all of these things that we're getting through today. Passing that means that, in my personal opinion, any other market in here that doesn't follow the standard by improving its tokenomics one way or the other, by reducing inflation, will probably not survive. So who's in line in here to survive? I think Monero is already really well in track. Have some advanced, which means it doesn't have to change that much to its business model. It's probably working already. Okay, I would say some others, like Bitcoin Cash, but I don't see the reason for Bitcoin Cash. So that's the thing. We've got Polkadot. Sorry, no Polkadot. We've got Polygomatic, which is, but all of the others, I think one by one, Cardano as well seems to have a good tokenomics. But in terms of pure supply side of the equation, of course, we take out the demand side, which is very important. But all of these other competitors still fighting for the same old market shares, most of them against Ethereum, well, they have to follow the standard. So this is, in my humble opinion, the only thing you should worry about when it comes to the next halving. It's not, are we going to have to suffer a bear market until then? Well, I don't see that likely. Like I said, it's more a demand side on the equation, and the supply on exchanges says, well, if demand shows up for whatever reason, there's no supply to meet. And in that perspective, prices will rise very quickly. Second thing is that on the pure supply side of the equation, the math to take out of it is that Ethereum has just set a new standard for risk-free rewards. And it's been dramatically reduced. So the others will have to follow, because the next one in line is going to be Bitcoin in 2024. And when this one does, the two market leaders will have significantly reduced their supply emission. And in that perspective, whoever doesn't follow suit by then will be erased. So there are multiple projects that will have to question their tokenomics, because there's only one way around. If the leaders on the market have very limited supply emission, close to 0%, or a very limited 1.5% emission at best, the rest of the market just can't sustainably take 15% dilution a year, or whatever it is. Though that means only one thing. People will pay a lot more attention to supply emission tokenomics. The only way you can sustain a high dilution on supply in the future after the Bitcoin halving is going to be if you have a four-digit kind of growth rate. But we know these things are unsustainable. If you get 4-digit growth rates, that means you're in a hype cycle phase. This is short-term expectation of the future, whatever, that's going to be unmet very likely. So here's the reality. Yep. As the market cycle grows in, and as Bitcoin will probably settle the score in 2024, it will destroy competition in this market. That's always the thing that I thought back then. There is a deadline in terms of timescales for the rest of the market to try creating new competitors who are viable enough in this market. Because whoever has net high supply emission without tremendous adoption will just be erased by its supply dilution. So here's the thing, next Bitcoin halving does just one thing that I know pretty much almost for sure, is that it will set the standards and destroy whoever has bad tokenomics until then. The bubble cycle with absolute dilution on the faces of retail because the VC investors are just basically selling on top of shitheads, not gonna happen anymore. You have until 2024 to play that pump and dump game. Afterwards, it's never gonna work anymore again. Yep, that's the only thing you had to know about Bitcoin halving. I bet you haven't heard about that one before, and that's the reason why I wanted to share it. So, down the research, yeah, do we have to wait for Bitcoin until the next bull market emerge? I don't think so. Right now, the challenger is taking market shares, and it has gone through its massive supply reduction of a triple halving. So this one alone can bring prices back up to the more average prices. So think range rather than crash, in my humble opinion. And range can retrace significantly when we've lost something like 60 to 80% in a straight line. Though, yep, rebounds can be solid. I don't think they're short-lived, but like I said, those who have much more bearish vision on the market might just be waiting for lower prices that will never show up. On the second hand, Bitcoin is just going to close the door. That's what Bitcoin halving is going to do in 2024. We don't have to wait for it until we get the bull market. It's just that when this day comes, the two market leaders will have almost negligible inflation, which means whoever doesn't fix its supply will have problems. All right? So that's all you need to know. There is a ticking time bomb on stupid tokenomics, and we have a date for it. That's 2024's halving. That being said, see you guys later. Bye-bye.